Kaushal Patel, luxury realtor in America's finest city. Your dream home in paradise is waiting. Buying your piece of paradise with Kaushal, presented on IQ Podcast at Attorney King Studios. Sponsored by Oscar Gastelum, president of Mortgage Hub Incorporated. MortgageHub.loans. Now, Kaushal Patel.
Hope you're having a great week. Hope you're having a great day. My name is Kaushal Patel. I'm with Windermere Homes Estates, and we're going to dive right into a popular topic in San Diego. There's lots of questions, lots of interest around ADUs. ADUs stand for accessory dwelling units. It's somewhat of a craze, I would say, and it could be a partial solution to our housing crisis. My first guest, Jonathan Webster, he is an ADU specialist. He knows all about them inside out. Jonathan, you probably still get the basic questions. What is an ADU and why should I build one on my property?
So an ADU, as you said, is an accessory dwelling unit, which really means a granny flat. People have heard about granny flats forever, but the state of California made, in their new laws starting in early 2017, official concept called an accessory dwelling unit, which now allows accessory dwelling units pretty much on every residential property in California. And there can be used for rentals, live-in family members, like a granny flat. That's why it's called that. And they could add property value to your property. So there's a lot of different reasons to build a granny flat or an accessory dwelling unit.
Now, does anybody who owns a home, do they qualify for building one in their backyard or on top of their garage?
So accessory dwelling units are permitted in any residential or mixed-use zone in the state of California. What I mean by mixed use, as long as there's a residential component to the property, like there's an existing or proposed single-family dwelling or multifamily dwelling, you can have an accessory dwelling unit on that property. But again, it's accessory to a main residence or main dwelling unit structure, multifamily dwelling unit. So you can't just have an ADU; you have to have the other residential component before.
Now, there tends to be a lot of red tape, when you're talking about building codes and permits in different cities in the county. How has California made it easier for these ADUs to be built?
So the biggest thing is they've reduced fees. So whenever you're building, you build an additional unit like on a multifamily property, usually there's some things called impact fees, and those impact fees are used to build out the infrastructure of the local neighborhood, like parks and handle issues with traffic, environmental issues, things like that. They've eliminated impact fees for all accessory dwelling units that are 750 square feet or smaller, independently of the state's mandate for that, which is one that eliminates these impact fees. Most cities and counties within the greater San Diego area have already eliminated fees. So there's no fees, for example, in the county of San Diego, unincorporated parts of the county, for accessory dwelling units.
And how many different types of ADUs are there available that people can pick from to build?
So in general, I put it into two categories: attached and detached, or garage conversions would probably be a third category. So garage conversions are obviously the cheapest. You already have a structure, you already have a foundation. Sometimes they already have plumbing, so that's the cheapest. Then you have attached, single story or detached 2-story, or people sometimes even build above the garage. So I'd say the most affordable is the garage conversion. After that are detached granny flats. That's the other big category. People do those because you can give them private yards. They seem more separate, and so sometimes you can get higher rental values out of them. Or just privacy. If you have, two family or multiple people in your family living there, parents and maybe the kids, or maybe a sister lives in one, you can still maintain privacy. So that's the perfect reason to do a detached ADU.
And if somebody's listening to this podcast and they're like, hey, I want to do this, how big, there are restrictions on how big an ADU can be, correct?
So that's a very complicated question. Yes, there are restrictions. Most places, if you're talking about a detached granny flat, most places in the state of California allow up to a 1,200 square foot accessory dwelling unit. Now, that's not guaranteed. Some places do limit it. So like Carlsbad and National City, to name a few, do limit it to being smaller. But no matter what, as of January 1st of this year, the state is guaranteed that you at least have an 800 square foot accessory dwelling unit, no matter what, as long as you stay 4 feet from the rear and side property lines. Now, that's by right. There's other things that can keep you from building an accessory dwelling unit. And we can go into that later when we talk about the things that can get in your way.
So you told me the minimum 800. How big is the max? No, it can't be more than 1,200?
Yeah, almost nowhere allows you more than 1,200. As of last time I read the law in Poway, they do allow up to 1,500 with specific situations. But pretty much nowhere else allows above 1,200 that I know of.
Okay, someone's listening. This sounds great. Okay, I want to build one of these ADUs. Is it going to set me back a year, 2 years? How long is this process? And how arduous can it be? Because getting permits from the city tends to be backed up sometimes. So when people are like, yeah, you can build an ADU in 6 months, how true is that, Jonathan?
It's very rare. Maybe you can do a garage conversion in 6 months or less. But in general, in most places, it's, unless it's a garage conversion, which typically takes, 10 to 12 weeks to get permitted. Most ADUs take 4 to 6 months, 4 to 5 months to get permitted, in those ranges, depending how complicated the ADU, how much structural work there is for their engineers at the municipalities to review. COVID has slowed everything down. So, there's no in-person meetings pretty much anymore. So everything's through email, or you drop it off and then the plan's going to quarantine. So it could take you a while. And then building can take anywhere from, 8 weeks to 6 months, depending on the size of the accessory dwelling unit.
So we're really looking at about at least a year.
I'd say for most accessory dwelling units, you're looking at 8 months to 12 months, most of them.
And what are some potential issues that some of your clients have had to deal with? It sounds great. Hey, we're thinking about building this ADU. It's going to, take about a year. But what are some other issues that may come up when they're building one?
So I'll kind of put them into two different categories. There's issues that could just raise your cost, and then there's issues that could keep it so you can't build an ADU. Now, those are much more rare. It's very, very rare. But things that raise the cost is if you don't have enough capacity for the water, for all the water fixtures. If that happens, then you might have to upgrade your water meter, upgrade the water lateral out to the street. That could add anywhere from $15,000 to $20,000 to the cost of your project. So people should keep that in mind and check their water capacity before they start the project. My company, ADU Pros, and I'm Jonathan Webster, can do that for you. We know how to do all the due diligence, so we can properly budget for you. Other things that could stop you, and this one's very rare, is not just having not the correct electrical gauge wire coming from the nearest transformer. Most cases, and that's not a big deal because you're usually overhead. But in the rare cases where you're underground electric, you could have to upgrade that wire. But that's very rare. If you're on septic, you have to expand the septic field. That could cost a lot of money, and sometimes you can't even do it because you don't have enough room on your property to add extra leach lines. Environmental issues, if there's protected habitat near you and you're in an area where there's not a lot built next to you, or there's a canyon, you might have to do a fire protection plan and irrigate within 100 feet of any structure. And if you're affecting sensitive biological habitat, you might not be able to build. Most times you can mitigate off-site and buy environmental land in a land bank, and that gets complicated. We could talk about that, but there's cases where you can't build in some cases where there's protected habitats. So we should definitely look out for those. So, but again, we could do all that research for you. We know how to do it and make sure your project will be successful before you start spending money.
And the great thing about Jonathan is that you're willing to do this legwork for homeowners, and it won't cost them anything, at least.
Yeah, in most cases. Some cases, if we have to hire a biologist, for example, that client pays for it. But in 98% of cases, I can give them a yes or no and what's possible without bringing in extra consultants.
And what is the cost for a homeowner to build an ADU? And I know the cost can vary depending on what kind of ADU, but what is the range we're looking at?
A garage conversion, you're typically looking at $45,000 to $65,000 for a garage conversion. That's the most affordable. In general, for a single-story attached or detached ADU, you're generally looking at $220 to $250 a square foot. For a second-story ADU built above a garage or above a house, you're looking at $240 to kind of $270. Misspoke. $270 to $300 built above another structure. For smaller it is, the more it is per square foot, because you still got to put in a kitchen and a bathroom and appliances and things like that. For two-story ADUs that aren't above another structure, you're now looking typically $240 to $260.
Okay, so are we looking at about $200,000 to $250,000 for an ADU that's not on the garage?
Yeah, I would say in general you're looking for if you're just building a detached or a second story, you're looking in the range of $170 to $240, depending on what you're doing. In rare cases, it can get higher if there's a lot of site work you have to do. You have to do grading and things like that. There's things that could cause other things that need to be done. If you're building on a hillside, there's other things to take into account. But in general, you have a flat lot, no issues with utilities. You're generally talking, mid 100s to mid 200s, depending how large the granny fund is.
Why should somebody want to hire an ADU specialist when there's these manufactured ADUs you can buy and just plug them in?
Because as of now, they're generally more expensive. Unless you get a manufactured home. A lot of people don't want to buy a manufactured home, and then you still have to put in the foundation. Then it's not much cheaper either in that cases. But the ones that you build off site, as of now, are more expensive than I could build on site for you. Now that may change in 5 to 10 years, but right now I could build more affordably than someone who builds it off site.
This is not a surprise to you, Jonathan, that we have a lack of supply. There's hardly the inventory that we need for the size of the city. We really have this housing shortage. Do you feel like ADUs can make somewhat of a dent Is it making a difference, or it's just helping people offset their mortgage or helping them do future family planning, like for grandparents to live in with them? Or do you think this can make a little bit of a dent?
Oh, I think it could definitely make a dent. I mean, I think they're estimating by like 2050, and these numbers are a couple years old, so if they've been updated, I apologize. But as of 2050, we're going to be something like 100,000 units short, something extreme like that. But we're building a lot of ADUs per year. I mean, there's a lot. That's the majority of what's going on in municipalities, the majority of the permits. So I have to believe it's making a dent. I don't have a complete numbers for you on how many they're being done a year, but it's going to make a serious dent, in my opinion.
And how has your business changed with these laws being, just recently, 2 years ago, the laws were relaxed, and like you said, the no impact fees. Have you seen a substantial increase in your business and people really curious about this option?
I don't know if it's due to the recent law changes. Definitely the law changed in 2017, but I think just people are becoming more and more aware as time goes on of accessory dwelling units. The more news articles are written about it, the more great information like your podcast gets out to people, more and more people are becoming interested. And then everyone knows someone, to see someone building down the street from them. It's just creating an energy around it that is causing more and more business. Yeah,
I got to say, in the last few years, when you look at listings, they'll always say potential for ADU, could have an ADU in the back, ADU. It's somewhere in the listing. And so it's definitely on people's minds. So, I really appreciate you coming in here and just kind of educating people. And I love the fact that you said you'd love to have a conversation with people. It starts with the conversation, get the information and see if it's right for you. It may not be, but, have the conversation.
Yeah. And I'd tell everybody to definitely talk to a specialist like myself or someone that they might know before they start their project, because every little municipality is different. Carlsbad's different than Encinitas, is different than San Diego.
And Coronado's different.
Yeah, exactly. They all guarantee a minimum, but get someone who knows the laws. It's hard to go onto the websites and read them yourself and interpret them, because there's a lot of things that aren't directly in the code related to what you're looking for that might affect the project. So,
and how have your clients been paying for an ADU?
We're definitely going to hear from your great specialists coming on after me. But in my experience, just a lot of people are doing home equity lines of credit. They're doing borrowing from their retirement account, renovation loans, construction loans. They're doing even reverse mortgages for a lot of elderly people. I know reverse mortgages sometimes are a bad word, but they're a great option for people in the right situation. And there's even things called shared equity programs. I don't recommend them, but there's companies that'll come in and pay for the whole ADU, and then you share your equity increase throughout the course of the time you own it. I don't recommend it. If you have other options, that would be a last case option. I'd definitely talk to an experienced lender that you might know.
Yeah, well, I do know a really, really good experienced lender who just happens to be in studio with me. Jonathan, thank you so much for your time. My experienced lender, one of the best in the business, is Oscar Gastelum. He is my mortgage expert, and this is a great segue into, we're talking about ADUs, Oscar, and does it get complicated to finance a home with an ADU?
When you're going in as a purchase, as of now, the lending world hasn't quite recognized the income that can be generated from an ADU for income to qualify. So can it be complicated? No, it's just simply the borrower just needs to qualify like any traditional loan, qualify for the price and the terms that come along with that. So the ADU is just factored into the appraised value.
Yeah, so that's something to keep in mind. So if you're looking at a property that's $1.2 million and it has an ADU and you're like, oh, well, it gets $3,000 for rent, but you can't use that rent until after you buy it.
Right. So, but then it switches though, right? So if you have a client that has, let's just say they do have an existing property now that has an ADU, let's just say they've had the ADU for at least a year and they've declared that income on their returns for a year. Now that's qualifying income for any potential other property. So if they're looking to buy another rental, they can utilize that as rental income.
There we go. Now we're thinking.
We're seeing it segue. The ADU, as you said, it's coming up a lot. I mean, for me personally, this year alone, I mean, it's coming up every single month. So it's definitely a trend that we're starting to see. And I can see that guideline changing, right? We're recognizing it as income for those that have actually reported it. I mean, it could be a year, it could be 4 years, 5 years, when we'll actually recognize that as qualifying income. But I think it's going to be definitely sooner than later.
And you just said that you are getting a lot more interest. So financing for an ADU, that's something you're seeing more and more often.
Yeah, and to kind of piggyback off of what you said, Jonathan, as far as like the options, you hit some valid points, right? A lot of people, everyone's unique, right? Depending on their credit, their equity position. But in a 10, 15-minute consultation, you'll be able to find out if taking the approach of an equity line makes more financial sense for you. I'm seeing a lot of clients entertain the idea, if they're in a strong equity position, to refinance and do a cash out while still taking advantage of today's low interest rates, right? Or simply pull from their retirement account. If they have it there and they feel comfortable utilizing that and they feel confident that they're going to replace it here in the next 5 to 10 years, and they leverage off of that as well.
Let's move from ADUs to foreclosures in San Diego. That's one of the questions that we get from a lot of potential clients or just people in general, your friends just asking, do you think San Diego will get a COVID-related surge of foreclosures? Why or why not?
Yeah, that's definitely a conversation that's been coming up, and we've had, in the last 2 to 3 years, right? The next bubble. We keep hearing about the next bubble, and based off my personal experience, and I've been in the industry now for a little over 24 years, so I've seen some trends, right? I can tell you that as an industry, and a consumer, we've definitely learned from 2008. But if anything happens, it's not going to be anywhere near to, or nor can we compare it to 2007, 2008. To come back to your question, do I think there's going to be this huge flux of foreclosures? I don't think so. I think the numbers are a little bit skewed as far as like unemployment. We've had conversations, Kaushal, where we said, well, a lot of those folks that are unfortunately in unemployment are renters anyways, right? Yes, they're not gonna be introduced to our market as a buyer, but we're already having an inventory challenge as it is. I mean, lenders right now are having a historic year, so there are people purchasing. People do qualify. People are making money. People still have their jobs. That's not to say that we can't take those numbers into account. We definitely got to be aware of them, but that's not the deciding factor if there's going to be a huge influx of foreclosures. Mortgages nowadays, compared to 2008, are insured. Where in 2008, a lot of homes were, people were buying zero down, so they were doing that 80-20 combo, 80% first. The lender was giving them the other 20. There was no mortgage insurance. There was nothing to insure the lender if the property were to go into default. We're back to traditional financing. A huge percentage of just San Diego alone is a lot of VA, a lot of FHA. These are self-insured mortgages, right? Not everyone coming in is putting 20% down. So those mortgages have mortgage insurance. So if there was any form of default, even those that do go into default, the lenders are protected. So that's not jeopardizing jobs. I mean, it's a huge ripple effect saying we're in a much better position now. The idea where you started hearing in 2010 that it was going to be harder to get a mortgage, where reality is you simply needed to qualify. We were tainted and thinking,
they were not qualified.
No,
that's the big difference.
Right.
I try to explain this. People are always like, well, no, it's going to happen, and we're waiting for the market to drop.
Right.
And if you listen to the chief economist of NAR, National Association of Realtors,
right.
Windermere's chief economist, Zillow's chief economist, economist for SDAR, all of them will tell you we do not have enough homes. We don't have the inventory. No. Every single offer, the last 9 offers I've put out, all multiple offers.
Right.
There's a bidding war going on in San Diego.
Right.
It may not be the case for every single home, but this is the reality right now. We just don't have the inventory, and hence having Jonathan to talk about ADUs and having that be a potential solution for people.
Right. And again, we're seeing it on the lending side, right? We're seeing the work that you guys are having to put into, we've been saying with our clients, right? Most of the work is technically done from the time we quote unquote get them pre-approved to the time we actually get them into contract, because that can be, a month, that could be 6 months. We don't know. It's going to take some work, but that's where most of the work is done. We want to position ourselves that once an offer gets accepted, we're not worried about if the client qualifies or not. At that point, it's simply a matter of qualifying the property, right? Appraisal, inspection, and of course, run title on the home.
I think during the last couple of answers to the questions, Oscar, we've answered how people are feeling about buying and selling, but are some people still apprehensive about it? Oh no, we're going to wait. We're going to wait until the first quarter of 2021 to really see when the bottom falls out, or after the election, but when you're buying a home, it's a long-term investment. You want to be in that home for at least 5 years or more. Yeah. And if it's not right for you for that 5 years, being a homeowner is not right for you, period.
Right. So right at the beginning of COVID, so right around March, yes, we did see a standstill. That lasted about 60 days. And that standstill was more leaned towards definitely jumbo, right? Because a lot of the jumbo lenders kind of put things at a standstill. That's a high risk loan, but we're back to business on that. So a lot of my jumbo clients, they're back looking, offers are getting accepted. The other small percentage was, hospitality, people that worked at hotels. It were the uncertainty, but then again, we were all uncertain. We no one pictured us being in this position that we've been in, but that lasted 60 days. Inventory is still a challenge. We're still extremely busy. People are still refinancing. People are cashing out, seeing the opportunity in order to buy an investment property, to take advantage of ADUs, right? So the activity is still there. There's still plenty of consumer confidence. A lot of companies, unfortunately, some companies are being affected, but a lot of companies have been able to adjust. You talk about hotels and restaurants, they're adapting, especially here in San Diego. We have the weather to do that, where we can move dining outside.
Just go outside on Fifth Avenue in Little Italy, Encinitas,
right.
Carlsbad, anywhere.
Right.
Al fresco dining is the
Right.
new way, and I really love it, and I
Right.
think they should keep that.
Right.
But, and not to make light of it, but really, what can you really be certain of? We could have an asteroid hit the Earth tomorrow,
There's
and there's no certainty.
Right.
But if, I guess going back to the question, wanted to just get some clarification on jumbos, because most homes in San Diego are jumbos. Anything over 679?
679, correct.
Okay.
And there's a window, right? There's a 679, and then once you start hitting $1 million plus, then obviously that's a jumbo. But there's different guidelines between $1 million to $1.5 million, anything over $2 million. So jumbo isn't just an umbrella over anything over that number. It's definitely in different categories, right? And then there's different types of loans that can be fit. So it really comes down to that consultation. And
when we're hearing those low interest rates, those low interest rates are mainly for homes that are under $500,000, correct? Yeah, I would say any loan like refinances right now, kind of going back to who's being affected. There's people that are still making their mortgage payment, right? They're still making their mortgage payment, but if they feel maybe the uncertainty and they're a little tight, maybe one of the spouses maybe is working not as much overtime, so they're not sure. So we do the consultation, take advantage of the refinance. Most loans, as long as a loan is under $510,000, they're definitely taking advantage of some premium rates right now. And you did mention that money is tight for many San Diegans who own a home. What are some of their options that they can take advantage of right now? So refinancing being one, right? And again, it's as simple as a 10-minute conversation. I think a lot of times, I tell folks, whether you're talking to me, but talk to someone that's experienced it, not just the computer, right? The algorithms, it's going to tell you you're approved. It's like getting approved for a credit card. They don't know your specific scenarios. You want to be able to talk to someone that knows your specifics, so going in and have full transparency as far as what's realistically possible, and make sure it makes financial sense for you. Because just because it made sense for your neighbor doesn't mean it's always going to make sense for you. But again, it's just a matter of investing 10, 15 minutes. We talked about in other conversations, Kaushal, as far as like forbearances and deferments, right? So some folks are taking advantage of that. That was evolving over time, right? Right in the beginning, we didn't know what kind of aftermath that was going to have. Lenders have adapted, right? So they realize there are some folks that are under forbearance, meaning they've stopped making their payments and it's going to come due, right? So if they stop making their payments for 3 months, those 3 months are going to be due in 3 months. That's what a lot of folks didn't understand right at the beginning. They felt it was just free money. The rule of thumb now is that if once they're current, if they need to refinance or requalify for another mortgage, whether it be a purchase loan or refinance, they just need to stay current and make at least 2 payments of their own on time. And how have we seen kind of the bottom with the forbearance? Remember, it was a 3-month reprieve. Has that time come? Has that 90 days? Have we seen what it's going to look like? Or when will that happen? We've definitely, as an industry, I think we've done a good job as far as adapting, like applying that rule of thumb, right? Versus, you would have asked me 2 months ago, I would have said, these people don't know the effect. Because the rule of thumb, they could have easily put in a guideline stating, hey, if you've been in forbearance, you're in some form of financial duress, we're going to require 2-year seasoning. So if someone was thinking about selling or needed to sell in a year from now or within the next 12 months, they would have been held hostage to this mortgage in some way, especially if they weren't in a strong equity position. But the idea is just the industry is getting better at it. To come back to your question, we don't know.
because we keep hearing about this new wave, right? We don't know what the new wave is going to be. My personal opinion, I think we've seen like the largest influx that was in April, May, and then people are back to work. People are realizing like, look, let's get current, and they're fine.
And as we wrap up today, I'd like to thank both of my guests today, Oscar Gastelum, who happens to be the sponsor of this wonderful podcast, and Jonathan Webster from ADU Pros. And thank you so much, guys, for, just educating people, and it, like you said, Oscar and Jonathan, it's just one phone call,
right?
And same goes for me, buying your piece of paradise with Kaushal. I would love to just have a conversation with you. It may not be, home buying may not be for you, but have the conversation. If you're thinking about getting buying a home or selling a home, the first phone call really should be to your lender. Right. They can really educate you. And if you're really thinking about expanding and pulling some equity out of your home and, building an ADU, call Jonathan. We're just a phone call away.
Kaushal, if I could just piggyback off of that, I mean, my recommendation is exactly that. I tell folks, look, if you're looking to do something in the next 6 to 12 months, sit down with your lender and your realtor if you're looking to sell. Because, the conversation you can have with your lender may not be in line with the conversation you're having with your realtor. So really having the right team put in place where you're going to work together. Going back to what we were saying, like most of the work is done from pre-approved to contract. So you need the right people on your side to represent you. It's a challenging market, but it's definitely a more rewarding market. Thus the reason you need the right people.
It's just all about starting the conversation.
That's right.
We're looking forward to having the conversation with you. Thank you so much for spending some time with us. Have a great day.